Well, hello everybody and welcome back. This is the Jason Stapleton program, broadcasting once again from deep behind enemy lines here in beautiful sunny, not San Diego, or in Los Angeles. I'm thinking San Diego because that's where I'm going to be speaking at the, the Libertarian National Convention there in San Diego. The party has asked me to come and keynote the speech, and I'm going to do everything I can to not suck. So if you happen to be in the area, we're actually going to try and set up some sort of meetup, although it's more difficult because it's not at, I'm staying at a hotel, and there may be some place at the hotel we can do it, or we may just find a place. But right now I was trying to figure out where I was staying so I could figure out what would be the closest place and where the event was. And hopefully what I'm hoping is that we can have an event and get together either right before the convention or right afterwards, because the convention ends, I think, at 9 o'clock, but it starts at like 4. So we don't want to go and you don't want to go and do any partying at 4 o'clock in the afternoon. Well, maybe some of you do. I don't know. But certainly I don't want to be doing any partying at 4 o'clock in the afternoon before I have to keynote. However, afterwards, you never know. So if you guys want to do that, I put a link in the show notes today where you can go and check it out and reserve your tickets. I don't know if you have to pay for it or not. I suppose I should know that. But either way, if you're in the area and you want to come out, I'm here in Los Angeles now, and I want to have the chance to talk with you guys. Today was a crazy day. We've got cryptocurrency stuff I want to talk about. We've also got the Dow crossing 26,000 very briefly and then coming back down. But there's a hiccup in that little deal, because it sounds like really great. Oh, we're past 26,000, but the way that it did it was there's a problem there. So we want to talk a little bit about that. And then we got some trade wars with China that we want to discuss as well as the immigration proposal. Apparently Trump has rejected the proposal, the bipartisan proposal that he said he would accept, even if it had things in it that he didn't like. And so we'll get to all of that. And then finally here in the show notes, if I can get deep enough into the stack, we're going to talk a little bit about nuclear weapons and the new nuclear weapons, the tactical nukes that they're talking about, the low-yield nukes. And this is an attempt, from what I can tell, to figure out a way to actually use nuclear weapons as a means of attack. I don't even know sure if it's a means of defense, but it's a means of attacking your someone else inside of the whatever the echelon of hierarchy of your defense network. So, but before we get into that, let me talk about FrameBridge, guys. We all have digital photos now that you want to put somewhere. Like they end up getting on a hard drive, and you go back like 5 or 6 years later and you say to yourself, oh, look at that picture. That was a really good picture. Why didn't I do something with that picture? Well, the truth is it's kind of a pain, because up until FrameBridge came around, you had to kind of go out and you had to take them to the store, and you had to get them, you put them on a thumb drive. You had to go there, and then, you had to print it off, and then they had to wait for it to come back, and then you had to show back up at the store. Then you had to take it to the frame store, because you want to get it framed up and put it in a frame and have that, wait for that to happen. And that cost you $100. By the time you got done, you spent $150 to get this one picture framed up. And it's just too much of a pain. Now FrameBridge has made it super easy. So all you do is go to framebridge.com. You upload your photo. You can do it even from Instagram. They'll take your photo from Instagram. They will help you pick out the frame if you want, and they'll do everything for you. They'll send you back this beautifully framed photo. I've done it several times. Every single time I've done it, I've had a good experience, and I've spent my own money on it. That's how good of a product it is that I have gone out. It wasn't like they said, oh, go test out our product. No. I actually went back and did my own stuff because I liked it that much. So, plus my listeners get 15% off their first order at framebridge.com when they use my promo code Stapleton. So here's how you need to do it. You go to framebridge.com, use my promo code Stapleton, save 15% off your first order. Just go to framebridge.com, promo code Stapleton. That's framebridge.com, promo code Stapleton. Really appreciate the sponsors of this show, because they make it possible for me to do this full time. And naturally, you guys make it possible in the end, because both you show up to listen, and in addition to that, you also go and you're a patron of our sponsors here. So the fact that you actually go and buy the products and utilize the products that we advertise on the show, you guys just thought it was something that you skipped over, like you've skipped forward. Well, I appreciate that those of you who listen do listen, because that's how this thing gets paid for. And unless we want to start taking donations again, which I really don't want to do, it takes your effort every single day, and I truly, truly, truly appreciate it, and I'm grateful to you. Okay, so let's talk about Bitcoin here. 40% down, 40% year to date. A massive decline in the price of Bitcoin. Now, before you think I'm going to go on some anti-Bitcoin rant, just don't get your panties in a twist, okay? I'm looking at the chart right now. And I put out on Twitter earlier today, and if you want to follow me on Twitter, it's at Jason_Stapleton. But I put out on Twitter today earlier that we were up against structure because the market had declined at the end of last year. I'm looking at right before Christmas, we had this major drop off to around about $1,200 a coin, and then we rallied up and into the first of this year. We were back up around $1,700 a coin, and then basically since the 6th of January, that thing has taken a gigantic nosedive from about $1,700 a coin, now resting at just under 10,008, I believe, is where we're at now, and that is below the structure support level at around 1150. So for those of you who have not taken my trading mastery course, that may not make a lot of sense to you. But for those of you who have, the wheels are turning. You're recognizing the chart. You know what those price levels kind of mean. And so here's the important point. The fact that we are below structure, the fact that we have broken below structure is critical, because if we close below that, that creates the potential for triggering sell orders. And one of the things that we know about Bitcoin is that 40% of the volume is coming from Japan, and it's coming from uneducated investors who are using highly leveraged accounts in order to trade. That means that they cannot take massive declines like that. And if the market continues to go lower, those of them who are holding out, hoping that this thing is going to go on, are going to be facing bankruptcy or liquidation or margin calls. And so they are going to have to liquidate as well as your bigger players may have to do that. Now, here's the thing about Bitcoin. I'm going to explain why this is happening in just a minute, because I think it's kind of an orchestrated attack by several governments around the same time to hurt the price of Bitcoin. But that's really irrelevant to whether or not it's something that you should be investing in. Now, I have gone on the record many, many times of saying I don't think it is a good investment. Anything that loses 40% of its value in a month, and frankly, in a matter of a couple of weeks, is not a good place to be investing your money. Now, if you bought at $20 a coin or even $500 a coin and you just closed your eyes and let the thing rise, hey, congratulations, you're one of the lucky ones. You really got lucky because you really didn't know what you were doing. You just closed your eyes and held on to it and had quote unquote faith that it was going to go up, and it did. So kudos to you. I don't begrudge you anything. Congratulations. You got lucky. But the truth is, the wheels will eventually fall off. If you look at the chart, just look at the volatility that's happening in the market right now in Bitcoin. Look at what the market looked like in October. All you got to do is go to a chart. Look at what it looked like in October of 2009. And now look at the volatility. Even look at the volatility in November of 2017. I mean, volatility was nothing like it is now. It's exploding. You're having huge equity swings back and forth. And this is a problem if you're an investor. Now, if you're a trader, you don't care. In fact, you love this kind of stuff. I'll eat this stuff up all day. You mean I've got a chance to see directional moves of several $1,000s a day in Bitcoin? I can make a fortune doing that. And that's actually something that I'm working on right now, if you guys want to know the truth of it. The next stage of what I'm putting together is I'm partnering with a friend of mine who is a phenomenal trader, and he working on a system to trade Bitcoin. And we intend to invest a chunk of our own money into this thing, into this system, to directionally trade this thing on a short-term basis. Because I'm not opposed to making money. People, trust me, I am not opposed to being in the market, and I'm not risk averse. Let's put it that way. I'm happy with risk. I just don't want to be stupid with my money. And I just disagree with the idea of it being an investment. Now, if you think it's an investment and you want to do that, that's fine. I would much prefer to be in and out of the market on a short-term basis so I don't have to worry about stomaching a 20%, a 10% loss intraday. Intraday means inside of the same day, because we have had 10% swings in equity inside of one day. And that is as an investor, that's just something I can't stomach. When I invest in something, I want to know in 10 years, I want to have some idea of what the projected value is going to be year over year of that investment. I have a very Warren Buffett style approach to investing. 10-year track record, pays good dividends, calculating a very even keel through good times and bad times. It's produced, that's kind of what I'm looking at. Like American Express is a great example. Feral Gas is another one that they had a phenomenal dividend for years. They don't have it anymore, but man, it was like free money. Putting cash into Feral Gas was like it was the closest thing as a guarantee as you're going to get in the investment business, and it was beautiful. And so I look for those kinds of investments. I don't look for stuff that's going to have massive swings. Now, again, if you bought this thing at $5,000 a coin, then you are looking good. If you bought it at $500 a coin, you're feeling even better about it. But what about the guy? I'm always thinking in the back of my mind as I talk about this stuff, I'm not thinking about the guy who bought it $50 a coin. I'm not thinking about the guy who bought it $500. I'm thinking about the guy who's looking at it today and saying, man, look at the hysteria. Look at all the money being made in Bitcoin. Should I get in? And for a guy who was looking at it on the 5th of this month, when it was trading near $1,700 a coin, and he's coming to listen to my show, and he's thinking to himself, should I invest? What is Jason saying about Bitcoin? I'm saying, I think it's a bad investment. If you know what you're doing as a trader, then go ahead. But I can't stomach the idea of telling a guy, oh yeah, buy and hold, just buy and close your eyes and hold, and watching that thing go from $1,700 a coin down to $17,000 a coin to $10,000 a coin. I can't do it to the guy. I can't sleep at night giving that kind of advice or sharing that with people. I don't think it's a good idea. But here's why. Let's talk a little bit about why Bitcoin is doing what it's doing, because that's an important piece too. So it started with South Korean headlines. South Korea basically saying that they thought that Bitcoin, that a permanent ban on cryptocurrencies was a possibility. As you know, Asia markets, I said it before, Asia markets are driving the Bitcoin market right now. So when South Korea says, we might just put a ban on this thing because we don't really like it, that's a serious concern for all Bitcoin traders. Then Steve Major, chairman of the European Securities and Market Authority, said investors, quote, should be prepared to lose all of their money in Bitcoin in a Bloomberg TV interview in Hong Kong. It has an extremely volatile value, which undermines it as a currency. It is also not broadly accepted. So he brings up 2 points of cryptocurrency folks, people who are object to cryptocurrencies. He brings up the fact that it's very volatile, which is not what you want in any kind of currency. You want stable currencies. And then he says you can't really use it anywhere. So there's only a limited number of places you can use it. So what is the real value? Well, the real value right now is that it keeps going up. Nobody is buying Bitcoin as a store of value. They're buying it because they expect it to rise in price. That is not a currency. What we really want out of our currency, what? We want it to be worth the same today as it is tomorrow. We want as close to 0% inflation on our currency as we can. That is not what's happening in Bitcoin. That's not why people are buying Bitcoin. That's not why we're seeing the rise in it. Now, many of you who listen to this show are firm believers in the fact that Bitcoin is going to be a usable currency, and the fact that you cannot inflate it is going to make it more and more valuable over time. You are the exception. That's what I want you to understand. You are the exception. You are not the rule. The rule of people who are working in this, who are trading in this space and who are investing in this space are people who are expecting the value to rise quickly so that they can make a lot of money very, very fast. I see it in the currency markets. I've seen it for years. I know exactly what's going on. And so this is a concern for all parties involved, for everyone involved. And I cannot stress enough that if you are going to be involved in the currency in the Bitcoin market, that you have got to be careful. You just have to be careful because there's so much damage that can be done. So, okay, we had South Korea comes out. Then we have the European Security Market Authority comes out and says, hey, expect to lose all your money. Then the China headline hits. Shanghai Stock Exchange has taken action, including suspending shares, requiring company clarification, and asking for risk disclosures against some stocks amid speculation of a blockchain concept. So now you've got the Chinese market coming out at almost exactly the same time and saying, yeah, we think that this is dangerous, and we're going to require a whole bunch of extra requirements before you can move forward with your Bitcoin trading or your blockchain concept trading, which I think is hilarious, given the fact that their real estate market is a complete sham, that their stock market is actually being propped up by the government, and the wheels are just about ready to fall apart on the entire Chinese market, and and they're worried about blockchain. I think that the real issue here, because of the way this all came out together, I would love to say it's coincidence, but it isn't. These guys talk to each other. They know what's going on. And I got a sneaking suspicion that this was done on purpose in order to rock the Bitcoin market, because nobody really wants this type of technology, this type of currency out there. And that's something else for you guys to think about if you're seriously looking at Bitcoin and saying it's the future. Because there are plenty of things that governments can do, any government can do, in order to completely eliminate Bitcoin as a viable means of exchange and as a viable investment. The very first thing they can do is just outlaw investing in Bitcoin. They can say it's a fraud. They can say it's a fake currency. They can do all kinds of stuff. That they can say it's a Ponzi scheme. They can do anything they want to and just prevent you from investing in it. And if somebody like China decides that they're not going to allow, or Japan decides that they're not going to allow their investors to put money in Bitcoin, it will collapse the Bitcoin market. Now, overnight, within minutes. What's even worse is that all they have to do is come out and say, okay, for example, in Japan, we're not going to outlaw Bitcoin, but here's what we are going to do. We're going to require that you meet a standard before you're allowed to invest in it. We're going to require that you be a quote unquote accredited investor. You see, in order to invest in like initial public offerings for the stock market, when Groupon was coming out, for example, or when Snapchat was coming out, I was naturally telling you guys not to invest in it, but it was on those types of IPOs, initial public offerings, are only available to those who are accredited, meaning they have a net worth of, I don't know, over $1 million or something, or they make more than $250,000 a year. If you're in either one of those camps, the government considers you educated enough to invest in IPOs. Outside of that, you're out of luck. So imagine if the Japanese government, knowing that 40% of the volume is coming from there, and knowing that 40% is coming from people who are largely broke. Imagine if the government comes out and says, you know what? You can invest in Bitcoin, but you got to be worth a couple of $1 million, or you got to make over $250,000 a year, or else you can't do it. What do you think is going to happen to the Bitcoin market when, 60, 70, 80% of the Japanese market can no longer invest? This is fraught with problems. So many different ways you can get screwed. And what bothers me the most is that nobody wants to look at how we get screwed. Everybody's got blinders on, and all they can see is how much money they're going to make long term. And nobody is even considering the million different ways that you can get screwed. And that's how I know that these people don't have any idea what they're doing. They've gotten lucky because the market has just continued to rally and rally and rally. But the fact is, if you are not constantly concerned with how you can get hurt, you don't really know what you're doing, because a good trader, a good investor is always asking, how do I get screwed? How am I going to lose everything on this trade? How am I going to lose everything on this investment? And if you are not asking yourself that question, you're doing yourself a disservice, and you're just wrong. And the fact is, when you look at this, how do I get screwed here? You get screwed 6 ways from Sunday on this deal. Almost impossible for you to make out, especially if you're investing right now. And one of the difficult things about this, and I wrote this in the show notes today, and we'll move over to the stock market here and talk a little bit about that in a minute. Actually, let me tell you guys a little bit about stamps.com, and then I will tell you guys about the Dow Jones crossing 26,000, and I'll tie the two together, because I think it's critical that we tie together the Bitcoin and what's happening in the stock market to kind of give you a complete picture of what's happening in the economy today. But guys, Hey, you guys are looking for New Year's resolutions? Here's a great one. Add stamps.com to your business and save a ton of time and money this year. I use Stamps. I love them. They're exceptional. You can literally do anything at that you can do at the post office. You can do from the comfort of your own home or from your office using Stamps. It's perfect for small, medium, even large businesses. Can use stamps.com to better facilitate the shipping and receiving of products. Simply go to your computer, print off U.S. postage, any letter, any package, any class of mail, and hey, the mailman will come to you to pick it up. Almost everything you can do at the post office, you can do right at your desk. Plus, Stamps has postage discounts that you can't get at the post office. Stamps sends you a digital scale that automatically calculates exact postage, so you don't even have to worry about making sure not like overpaying for your postage. So here it is. As I said, I use Stamps because it is the quickest and easiest way for me to send packages and stuff through the mail. I have absolutely zero complaints with them. They've been phenomenal every time I've used them. And right now, you too can enjoy Stamp service with a special offer, including a 4-week trial plus postage and a digital scale. Ready for the new year? Go to Stamps.com, click on the microphone in the top of the homepage and enter Stapleton. That's my name, Stapleton. That's Stamps.com. Enter Stapleton and enjoy yourself a little bit of ease by never having to go to the post office again. Okay, so talking a little bit about the Dow Jones here, crossed 26,000. Now, if you pull up a chart, and again, those of you who have been through my training program on this, it makes it so much easier for you to understand what's going on. But we essentially had a gap up in the market. So the market closed the night before. So Monday night, the market closed, and the market closed somewhere around 26,700, something like that, okay? It gapped up. What that means is overnight, prices changed. So the overnight, it doesn't stop just because the market is closed. Prices are constantly fluctuating back and forth. Even though you can't trade, even though the market's not open, prices are still moving up and down. People are trying to decide what they're going to bid, what they're going to offer for a particular stock. So based on that, the open of today's market was at 25,976, almost 26,000. So we gapped from, what was it, 25.7 to 25.9, couple hundred points. And then we rallied from there ever so slightly to just above 26,000 before collapsing. And we're now sitting, as of this show, right around 25.8, right where the market closed yesterday. That type of candle is not a good candle. Now, the market hasn't closed yet, so we'll have to wait. It's the same thing with Bitcoin. Like, we could get a major rally out of Bitcoin, and that will signal a buying opportunity. That's what I put out on Twitter. Depending on where the market closes, it's either going to be, oh crap, get out of the market, or hey, this is a great buying opportunity. We will not know until the market closes. Or in Bitcoin's case, until the candle rolls over at, 5 p.m. today, Central Time. And so when we look at this, and we look at the market coming back down and retesting the open of the candle, we're filling the gap from where the market opened to where it closed the previous day. And if the market does not rally from there, if we continue lower, that's going to be a bad sign for the stock market. And you're starting to see more and more people on Wall Street and everywhere and in media, all the pundits and the talking heads and the guys who write columns, they're all saying the same thing. They're all saying this is euphoria. We're in the late stages. I mean, I think Merrill Lynch is coming out saying we're in the late stages of this economic boom, and you ought to be worried. And they're using all kinds of different metrics to show why they should be worried. And you've got a whole bunch of other people showing metrics about why you shouldn't be worried. And the fact is, if you read books like Tipping Point, you know that there is no right time. There is no measurement to determine when something is overbought or really oversold, because it happens different every time. And all you can do is take a look at what's happening fundamentally and what's happening technically and try and make the best decision you can about your trading and your investing. And so when I look at this, one of the things that you are seeing on Wall Street is that nobody, although everybody sees it and everybody's concerned about it, nobody wants to do anything about it. Nobody wants to go out on a limb and be the first one to pull their money off the table. Why? Think about it like this. Imagine you're a fund manager and you've got $1 billion under management and you are making, all you got to do is just like return something. And your $1 billion is going to stay and you're getting 1% of $1 billion in a management fee, and you are just happier than a pig and you know what. Every year you're just getting paid through the teeth, and you got a little system working, and the system's generating nice profits, and the market continues to go up, and your clients are all happy, and you're happy, and everybody's fat and happy, and you're socking your money away, and you don't have a care in the world. Now keep in mind, if you're a fund manager doing this, you literally have more money than you could ever spend. Like, you do not need to work anymore ever. It's just a matter of you want to do the work. And so you're staring at the market, and you're going to yourself, you're saying, self, I really think this is a bad market. I really think that we're about to the end of this thing. Can't be for sure, but I really think this thing is almost over. And I really feel like I ought to be taking some money off the table. And then you're looking at all the other fund managers, and you're all sitting around going, yeah, I think we should probably take some money off the table. Well, it might be a good idea to just take a little bit off the table and maybe put it away just in case the market takes a dip. But nobody wants to do it. You want to know why? Because if you take your money off the table and the other guy doesn't, and the market goes up, that guy's producing better returns than you are. If that happens over a significant period of time, guess what happens to your $1 billion? That gets rerouted to another fund manager, to another fund. And now all of a sudden, your fund is in trouble. You're not making the kind of returns that you should be making. And so there is this natural bias on Wall Street to stay in the market way longer than you need to just continue to stay in far beyond the time period when it makes sense to get out, because everybody wants the returns. And then when the wheels fall off, when it all collapses, guess what everybody says? I say, well, everybody got hurt. Well, it wasn't just us. Yeah, we lost a little bit, but we didn't lose as much as those guys did. And so then even when you lose, it's like, I just hope I don't lose as much as everybody else. Oh, he lost 8%. I only lost 6.5%. So yeah, don't go with him. Stay with me. Everybody got hurt. Same thing. It was exactly what happened after the financial meltdown in 2007, 2008. There were lots of people who saw the writing on the wall. Lots of fund managers who were worried and nervous. Nobody bothered to do anything. They just put their head in the sand, and then when the thing crashed, they all sat around pointing fingers at each other, going, oh, well, I didn't do as bad as that guy did. Oh, the market lost 50% of its value. We only lost 18%. Be glad you were with us and you didn't have your money just invested in an index fund, right? This is the line that you get. So there is this natural predisposition to want to be long in the market no matter what. Bitcoin is the same way. You get this kind of irrational exuberance from a group of people who think that it's always going to go up, that the market's never going to decline. Oh, we're not going to see, it's not going to go back down to $800 a coin. It's not going to go back down to $1,000 a coin. Why couldn't it? Why couldn't it decline that far? Why couldn't you lose every single penny you had invested in Bitcoin? You know, if the market let me just end it like this, because I'm not against Bitcoin. I really am not. I'm not against the stock market. But anybody, you can look at me as an example. I'm the perfect example. So I have been warning everybody about Bitcoin for quite a while. And the market just continues to go up and up and up and up and up. And I'm looking at it going, well, it's just a matter of time. But yeah, you missed out on a lot of upside if you had listened to me when I was talking about it at $7,000, $8,000 a coin and saying, this is a bad idea. And now you've watched it go to almost 20,000 and you're saying all the money you could have made. Same thing happens to investors and fund managers. You start sounding the warning bells, talking about the market's going to have a decline, that we're going to see a collapse, and you start pulling money off the table. Everybody's looking around going, well, the market just went up 20%. We literally went up 1,000 points in a day. What are you doing? Or in a week, went up 1,000 points in a week, and you weren't even in the market. I'm not leaving my money with you. Warren Buffett deals with this every single time there is a market collapse. About 3 years prior to the market collapse, 4 years prior, he starts pulling money off the table and his returns decline. He goes cash heavy. He ends up like making significantly less returns. The media all come out and say, has the golden child lost the Midas touch? You know, is Warren Buffett getting too old? His investments aren't performing as well as they used to. And then you have this major market collapse. Everybody loses their shirt. People are going bankrupt. And Warren Buffett is sitting on a truckload of cash that he uses to buy up everything on the cheap. That's amazing. but he's got a stomach. He's Berkshire Hathaway. He's Warren Buffett. Most people don't have the benefit of being Warren Buffett. The rest of those fund managers out there are hooking and slashing, trying to raise capital to try and be the next Warren Buffett. And so there is this natural propensity, both in currencies and in Bitcoin and in the stock market, to stay long much longer than you should, especially when we've been in this massive rally. And looking at the Dow Jones, it's just incredible. The move up is just amazing. We have not had a significant decline since the January of 2016, end of 2015, into 2016. That was the last time that the Dow Jones had any significant retracement. Think about that for a minute. We've been basically straight vertical. And everybody's sitting around patting themselves on the back, talking about what great traders they are, what great investors they are, how smart they are. And eventually there's going to be a collapse. And all those guys who thought they could trade, who thought they could invest, are going to find out just how difficult it is to really be successful at this. And I got a feeling that sooner rather than later, all the Bitcoin folks are going to realize that as well, because they're going to see this market trading now around 10,005, 10,006. They're going to see that thing drop to about 8,000. And then they're going to see that thing drop to about 4,800, because those are kind of the price levels that I'm watching in terms of support levels. And you're going to see this thing, settle down somewhere around $3,000, $4,000 a coin. And everybody who bought over the last year or so are going to be left out in the cold. Actually, it's not quite that long ago, but basically in the last 5 to 6 months are going to be damaged. And that's just my guess. And so on this show, I try and provide a little bit of caution to you, so that you do not put yourself, so I do not put you in a position where you become part of the what do you call it, when you just repeat something that somebody else says. You know what I'm saying? I need somebody else here. I need somebody else here to buffer this. Does anybody else want to come in and sit across from me and just do witty banter with me? That'd be all right, right? Well, I'm going to figure something like that out, because I'm sitting in this room. If I can deviate from our discussion for a little while, I'm sitting in this room. I came into the studio today. I'm doing better today. There's so many moving pieces. As you guys know, when I had my old studio, I literally looked out to nothing. There was nothing happening out there. There was a camera set up, but really it was just me at a desk with a microphone looking out into nothing. And so I just kind of would zone out and I would talk. I'd look over my computer if I had something I needed to do, or I'd grab the paperwork to read the ad, and kind of paying attention to the time, but really paying attention to the time hacks was the only thing I was doing in the studio. Now here I got stuff running and things are happening, and I get sidetracked. And I walked in here yesterday, and it was like, for some reason, they keep the studios real dark. And I'm looking, I'm sitting in here and it feels like creepy and dungeony. And I'm like, I'm not sure if I like this. Like I like the old setup where I had lights and, the cameras were on, and that was pretty cool. And so I came in today and I actually turned the lights up, and I feel a lot better in here with the lights on. I feel like I'm not so in a dungeon, but it's literally just me in here talking. And that blows. I love the idea of having you guys listening live every single day, and I'm going to get back to that just as soon as I can. In fact, when I get out of here, I'm going over to the office, and I'm going to see if I can figure out a way to start broadcasting live, and I think I can do it. I think we can get back to at least delivering audio live, so I can send you guys the live audio link, and you guys can listen live on audio. Now, video is going to take a little bit longer because I got to convince these cats to give me a different studio. But for right now, we're going to be good with just some sort of live interaction, because as you guys know, I loved seeing the interaction on Twitter and that coming back and forth with you guys. We got to get back to that. We got to get back to this idea of you and I interacting in real time, so that, this is a collaboration between you and I, rather than me just talking to you. And I really, really like that. And I know most of you guys listen and you're not part of the live thing, but for me, it's important for it to be live. I like it live. So that's what I want to get back to. But anyway, I digress. Be very careful. These are very dangerous times to be investing, and especially in things like Bitcoin. I'm not going to say don't invest. I have no idea whether it's going to be a viable means of exchange in the future. I know it's not right now, but it may very well be in the future. I may be totally reading this wrong, and I always throw out that disclaimer because I have been wrong many, many, many times in my life, and I've still managed to do okay. But what I can tell you is the one thing I have learned about being wrong so many times is that to never, ever, ever drink the Kool-Aid. Never, ever rely on someone else's opinion of what's going to happen in the market, with a stock, with a job. Use your own discretion and then learn and pay attention so when you make a mistake, you don't make the same mistake again. I spent 10 years working with traders, 10 years. Every single day, and they all have basically the same problems. They are all emotional wrecks. They all have no system and no plan for how they're going to navigate the markets. They all have this blind kind of, I'm going to get into a trade, then I'm going to cover my eyes, and I'm going to look tomorrow and see if I made any money. And I literally saw a guy, someone just wrote something to me or responded to me in the Twitter feed today when I talked about Bitcoin. And basically, I was just saying, Bitcoin is at a place where the technical analysis it looks good for a potential buy. If it holds the support level, it's a good place to buy. And the guy came back and said, just buy and hold. Just buy, close your eyes, come back in 5 years. And I'm just like, for Pete's sake, that's the worst possible advice that anyone can give you. If anybody tells you, just bury it in just cover your eyes, don't worry about it, come back in 5 years and you'll probably have made some money, run for the hills. Because that guy doesn't know what he's talking about. Now, it may be a good idea for you to do that, but that guy doesn't know. That's like the guy who's hanging out the window, screaming and whistling at chicks. That guy's out of ideas. He's out of options. He's literally down to screaming out the window at some chick walking down the street. He's that desperate. And anybody who walks in and says, just cover your eyes, just hold on, just throw your money against the wall and hope that it does well, that guy doesn't know what he's talking about. That guy's dangerous. Stay away from that guy. For everybody else, good on you, make good decisions. And I think the training course, I think the training course is set to be released. I did my Trading Mastery series, which was a week-long training that I did live. Well, I have the recordings for that, and I believe next week we're releasing the recordings of that at a discount. The actual price of the course is going to be something like $1,000. But we're going to discount the price of it for those of you who want to get in, and I'm thinking about offering a bonus of some live coaching, some group coaching for everybody who gets involved in that. So if that's something that interests you, you can hit me up on Twitter at Jason_Stapleton, or you can email me Jason@JasonStapleton.com. Just tell me, hey, I'm interested in that, and I'll make sure that the email or I'll make sure you are on the email list so that you get it. And if you're not on the email list, by the way, screw it. This is too many announcements here today. We need to get to some news. We got to talk about China. So, okay. Let me tell you about Blue Apron, guys. Getting a healthy meal, even now, getting a healthy meal is so difficult because there's just not a lot of time. You work, your spouse might work, trying to run the kids around all day long, and you get home and finally get a chance to sit down, and now it's, what are we going to eat? Wife's been working all day. I've been working all day. Kids get home from school. They're saying, hey, what are we going to eat tonight? The truth is, it's really hard to get fresh food and get good food every single night, and that's where Blue Apron comes in. They're the #1 fresh ingredient recipe delivery service in the country. They offer different plans for 2 people or for families. They even offer a wine plan, 6 bottles of wine from renowned winemakers delivered monthly. That's incredible. All right? So if you are looking for great recipes that you can cook on your own, and you want all the ingredients, so you don't have to do shopping or anything. You just go to Blue Apron and they'll take care of everything. What they do is they have chefs that prepare these incredible meals, and they ship all of the food to you, everything you need to make a delicious home-cooked meal right to your door, and all you do is pull out the instructions and do it. I've done several of these. They're super easy. Even I, a guy who cannot cook, has been able to put together a meal using Blue Apron. Phenomenal. And right now, Blue Apron is treating all of my listeners to their first 3 meals, a $30 value, with your first order at blueapron.com/Stapleton. So check out this week's menu and get your $30 off with free shipping at blueapron.com/Stapleton. That's Blue Apron, a better way to cook. We really do have just fantastic advertisers on this program, and you should try all of them because then they will come back and they will want to buy more advertising from me, if we're being honest. But anyway, all right, so let's talk about the trade war, but the potential trade war with China and the U.S. Right now, America is looking at a mix of tariffs and quotas aimed mainly at China's imports. It has to do with everything from steel to solar panels to washing machines. They're trying to put the hammer down on China because China just doesn't import as many of our goods, and we have a trade imbalance with China. Now, to me, this is really not that important because our economy is just different than China's, and because we're a more mature economy, it doesn't mean that we're any less capable of maintaining, high employment and a broad, diverse working class. It just has a lot to do with the fact that China has a lower income and a lower standard of living, and they are able to do a lot of things cheaper than we are able to do them here. All right. This is a brewing battle. I'm reading from Wall Street Journal right now. It says, in this brewing battle, fueled by protectionists on both sides, both Mr. Trump and his America First and its national counterpoint, President Xi Jinping's China dream, each side has an exaggerated sense of its own advantages. Goes on to say, global markets seem remarkably unprepared for what could turn into a clash of the titans. Outside of North Korea's nuclear threat, the U.S.-China trade war is the biggest potential economic spoiler of 2018. I don't think that's true, by the way. I think the biggest spoiler, the biggest economic spoiler is going to be China's decline. I cannot emphasize enough. I did an entire episode at the end of last year on the problems in China and the ripple through the world economy that it will have if China has a serious recession. And they just haven't had one yet. They just continue. Their growth rate is probably not nearly what we think it is and what they project it is. But at the same time, how on earth do we know? And eventually, because of all the problems in their stock market, all the problems in their housing market, all the problems in their labor markets, you are going to have serious issues with China. And the question is, how long can they continue to prop up their own economy before it all falls apart? And that is the big unanswered question that nobody can put their finger on. I wish I could tell you, oh yeah, in 6 months they're going to be toast. But the fact is, governments have come up with some very creative ways to continue to fund an economy even when things, and prop up an economy even when things are so dire you couldn't imagine ever getting to that point. So negative interest rates is one. Below the zero bound. Who would have ever thought that you could have negative interest rates? That someone would buy a debt from you and that they would have to pay you to buy that debt? Who on earth would have ever thought that was possible? Yet it is. And so one of the things that's going to happen eventually is China is going to have a major recession. They're going to have a collapse on par with what we had here in America. I think it will be bigger just because China has massive problems way beyond what we had here in America in 2007, 2008, but I don't know for sure. But assuming that we know it's going to happen because all economies have recessions, what does that mean? That to me is the biggest threat moving forward for America. But let's talk about this tariff issue. So Donald Trump thinks that he's going to throw his weight around, and he's kind of hamstrung by Congress right now, but he thinks he's going to throw his weight around by issuing a whole bunch of new tariffs and a whole bunch of new quotas, like minimum or maximums that they can bring into the country. He's hoping that when he does this, it will bolster U.S. production. And the problem with that is, number one, tariffs hurt. When you put a tariff on something, it's like putting a tax on it. We know that everything you tax, you get less of. And everything that you subsidize, you get more of. So if you make things more expensive, you get less of it. If you make importing goods more expensive, you get less imports. That means that prices have to go up. Either that or somebody has to figure out a new way to produce products to drive the price down. So you've got to have productivity increases. And so when we look at the things that are happening in the stock market, in the markets today as it relates to international trade, one of the big misconceptions, and Donald Trump is guilty of it, is thinking that a protectionist strategy is going to be beneficial to the United States. It is not. What we need is open and free trade. What we need is for the Chinese to allow us to ship anything we want there, and for us to take whatever we want from the Chinese. Now, the tricky thing is, what happens when the other guy doesn't want to play ball? What happens when you're like, yeah, free and open trade. Whatever you guys want to send here, we'll take it and we'll sell it. And if it doesn't sell, then you guys are out of luck. And hey, in return, we want to be able to ship anything we want to your country. And the other guys say, you know what, we're happy with getting all of our stuff sent to you guys for free for no tariffs, but we don't want to do the same thing. There are two schools of thought on this. The one is that, okay, whatever tariff you apply to our goods, we will apply the same tariff to your goods. So if you want to put a 10% tariff on everything that's coming into your country, then we will do the same to you. Therefore, creating equilibrium in the pricing structure. However, that is a detriment to both sides again, because anytime you're putting a tax on something, you're getting less of it. So it's not really beneficial to anybody, and certainly not to the consumer, to have that kind of price tariff matching happen. What should happen is we should say, look, anybody who wants to ship goods and services here can. We will benefit from those, and we in turn will work our best to try and create the same sort of environment with you. Trade is important. Trade matters. Where goods cross borders, armies do not. Having good relationships and open and free trade with other countries is essential. And without getting into all of the economic principles behind it, it is better. If you can produce a T-shirt in Cambodia cheaper than you can do it here in America, then the Cambodians ought to be making T-shirts. We ought not be making T-shirts here in America. We are far better off producing things that we have a competitive and comparative advantage to produce, rather than trying to do all of that internally here in America. And there's half a dozen great books. Thomas Sowell's is my favorite, Basic Economics, on this principle. And you don't even have to read very far into Sowell's book to get to that section where he talks about comparative and competitive advantage, and why it makes sense to trade with other countries who can produce products cheaper and more efficiently than you can. So I will send you guys there to read that if you have an interest in it moving forward. But one of the things that people are coming up with, and one of the things that they're saying about this trade war, is that, oh no, Donald Trump is going to do this, and then what's going to happen is the Chinese are going to stop buying our bonds. Chinese buy a lot of our debt. And what's going to happen if the Chinese stop buying our debt? That's going to be an end. That's going to be the collapse. That's going to be the end of our markets as we know it. If China stops buying our debt, we are totally screwed. We are totally beholden to the Chinese, and there's nothing we can do about it. That's my idiot internet voice. Truth is, that's not the case. Here's what's going to happen. Because at some point, you're going to have a major recession in the U.S. Eventually, we're going to have a decline. Same thing's going to happen to China. And the question is, how are we going to continue to keep rates low? What do we do if we need to keep our debt low because we cannot afford as a nation, because we borrowed too much money, to have 3, 4, 5, 6% interest rates? How is it that the government is going to continue to borrow money? Well, we have this beautiful thing called the central bank, the Federal Reserve. And the Federal Reserve can create money out of thin air. They don't have to worry about anything. They just push a couple of keys and there's an extra $1 trillion. And so when push comes to shove, here's what you will see happen. The central bank will come out and it will purchase specially issued bonds from the federal government. So there will be bonds that you will buy from the feds that pay, 6%, 7%, whatever. And then there will be the bulk of the debt, which is created by a special bond that the central bank, the Federal Reserve, buys itself. And that will be at 0.25%, 0%, whatever they need. Negative interest rates, if that's where we want to go with it. That way the government can continue to fund its operation, while at the same time not having to pay exorbitant amounts of interest on its debt. And you may wonder, well, why haven't they done this already? Well, because the situation isn't dire enough for them to come out and say, oh, you know what, from now on, the government's just going to borrow by creating money, by printing money at 0%, so we never have any debt. Now, what happens when you do that? Just out of curiosity, those of you who are going, well, why couldn't you do that? What happens when you do that is you get massive inflation because you now have a lot of money circulating, and it doesn't always show up at the grocery store. It shows up in the bond market. It shows up in the stock market. I've been talking about this for months and months and months. If you're new to the show, please go back, take the 10-episode challenge, go listen to the last 10 episodes, because we don't discuss things in a vacuum here. You really have to be around in order to be able to grasp the full depth and breadth of this show. You've got to listen to the last 10 episodes to even have an inkling of what we're talking about here. But we keep talking about the bubbles, the inflation in the stock market and the equities market. I'm sorry, the bond market and the equities market. Those bubbles are created by central bank printing. The difference is that money didn't go directly into the economy. It went into the markets. So it wasn't felt as much at the grocery store. It wasn't felt at the car dealership. It wasn't felt when you went out to dinner. It is being felt and seen in the markets. And what's crazy about this is everybody's excited about it. They can't believe how much the market has increased and how much more money there is in the stock. Everybody's feeling richer. And what will eventually happen is people will sell shares. They will take that money. They will go buy things with it. And then it will move from the markets into the actual economy. And you will see that shift, and you will see that that inflation actually start occurring in a tangible way to you and I, to those of you who don't do a lot of investing. It's a problem, guys. You cannot operate a government, you cannot operate an economy with that type of tomfoolery. It's a sham. And eventually things fall apart. And so this trade war that either will or will not happen is foolish, because neither one of these countries stand to gain through a trade war. We are much better off, instead of taking this hard-lined approach to China that President Trump wants to take, to simply take an accommodative one and say, hey, we love the fact that we get lots of cheap goods from you. And if you are sitting on the other side of that here in America going, well, what about my job? What about my job lacing up sneakers at the sneaker factory? Well, you've had time. It's not as though you haven't seen the writing on the wall. It's not as though there hasn't been ample opportunity for you to prepare for the future, to increase your own human capital, and to put yourself into a position to make more money and increase your skills so that you don't have to worry about your job leaving for overseas. Why have you not done it? We are in a state of international competition. You are not just competing with the guy down the street for your job. You are competing for the guy in China, in Singapore, in Thailand, in Bangladesh. And if you are not at the top of your game, if you are not worth every penny and more, you can guarantee eventually your job is going to go away. So don't allow that to happen. Spend every waking moment working on increasing your own human capital, on increasing your knowledge and skills that give you value. And then last but not least, don't turn around and listen to every idiot who promises you riches beyond belief if you just invest your money in X, Y, and Z. What you should be doing is coming back to this show every single day and learning a little bit about what's going on in the world around you so that you can be better prepared and more informed about how you ought to be directing your own life. Guys, thank you so very much for being here. Tell a friend. Somebody needs to hear this episode. I always say tell 3 people. Tell 2 people about the show that you really like and that you think will like the show. And then go to one person that you think, I'm not real sure what this person will think about the show, and give it to them as well. Because one of the things I'm really prided myself on in this show is being able to communicate with people who do not agree with my point of view. Because they walk away saying, I don't really agree with everything that guy said, but he made a lot of sense. And yeah, I might listen to him again. That's how we change hearts and minds. That's how we move the needle. That's how we move ourselves closer to liberty and closer to that world that we all want. A freer and more prosperous world for everyone is winning converts, not arguments. And so use this show as a way to win converts, as a way to show people the truth and help them achieve the type of results out of their life that they want. And I will be back here again tomorrow to help you do it and to guide you along the path. Until then, be safe, be good. I'll talk to you then.